Accountant, Company Secretary, IIM Lucknow, is an IFRS certificate holder from ICAI, is also certificate holder of FXTM ICAI with more than 15 years of experience in areas of investment and fundraising IPO. So apart from a successful corporate career, from his trainer and finance and treasury operations. He is also NSIM certified and SEBI registered research analyst and train the aspirants looking to make career in stock markets. So with this brief introduction, floor is yours, sir. Please.
Thank you very much. Good evening, ladies and gentlemen. Let me begin with thanking ICAI Vijayawada for giving me this platform to speak with all of you today. Just look at this small picture as well as read the quote.
Money is not in buying and selling.
It says the big money is not in buying and selling, but it is in waiting. And this is from Charles Munger. How many of you know who's Charles Munger? Who was Charles Munger? How many of you knows who is Warren Buffett? So, Charles Munger and Warren Buffett, they were partners in Hathaway Berkshire. By the way, if you know the list of top 10 richest persons in the world, there's only one name who has number of securities in the portfolio. Okay? Other than that, the other 9 richest persons owns just one share, which is a share of their own company. Only Warren Buffett is in the list of top 10 who has number of shares of the companies. So he's the only investor. Have you heard the name of any trader in the top 10, top 20 list?
Trader.
Trader. Yeah. So the idea is that you can only generate money if you show patience in the market, if you hold the market. So I'm going to cover a topic of Techno and Funda. What is Techno and Funda? What is technicals? Can you invest only basis fundamentals? Can you?
Yeah, for long term.
Can you invest basis fundamentals?
Yes, sir. Yes.
Yeah?
Yes.
Okay, I'll give you an example. HDFC is stuck at 1,800 price range from past 2.5 years. I could have invested to this money in fixed deposit, I could have gained 6.5% also, right? HDFC is stuck, fundamentally strong, right?
Blue chip.
Blue chip, but not moving. Why? Fundamentally strong. Can I invest basis fundamentals?
Maybe in another 2 months or 1 day.
You never know. You don't know. You don't know, right? But can you put your, there's a concept called time value of money, right?
Yeah.
Is it doing justification with the time value of money?
No.
And the team,
Answer is no.
the period of holding 5 years or 10
That's
years,
what,
if you put
waiting,
it, then you can.
So why you need technicals in it? Because you want to wait for the breakouts. You want the price action to be positive for investment. That is the reason whenever you do a research based on fundamentals as well as technicals. Right? Let me start by calling out that I'm a SEBI registered research analyst. There is following do's and don'ts. Number one, I'm not going to take name of stocks, which I'll be talking about. And if I'm taking any name of the stock, please don't consider that to be as an investment, call.
Subject to market.
It is based, please do your own market research. You see, I'll give you a very important point. Because I started saying that you will earn money in the market if you hold the market. not by doing trading. So, how many times a market will give you the opportunity to invest? How many times market will give you an opportunity to invest? Assuming you have done your CA in the age of 24, 25, you retire at 60. How many years do you have to invest and create your wealth?
35.
So you have 30, 35, 40 years max, right? To earn. We are not doing NGO, we are not running NGO here, right? We are here to earn money. We have done CA to earn money, right? So we want our money to grow, right? So that we can leave this legacy to our kids. So we are here to earn money, right? This is clear. So we have effective 35, 40 years to earn. How many times market will give you this opportunity?
So many times. Every day.
Answer is market gives me opportunity every single day. But then I have to hunt for that opportunity. I have to look for the stock which will give me return. But that return will be max to max 10%, 15%, 20%. So now let me rephrase my question. How many times market will give you the opportunity to invest in the market at lower valuations or at a better valuations? Only 4 to 5 times in your career. That means once in 5 years, you will get that opportunity.
Pattern also shows the same.
Let's see now the pattern of Bombay Stock Exchange. Sensex. 2008 financial crisis, market melted down 66%. Remember these percentages. 66%, 38%, 28%, 50%, 100%. I'll tell you why. Then 2015 came Chinese slowdown. Also Modi ji came into power. Market melted down 25%. But market didn't give you negative returns. It started going up after 2015. Then came 2020 coronavirus. Market melted down 39, 38, 39%. But then again market took a U-turn. Now at 24, 25,000 levels. I'm talking about Nifty numbers. Now at again 24,000, 25,000 levels. Are we expecting another crash now? 2020 we have seen, right? Are we expecting another crash? How many says yes?
Yes.
Okay, give me fundamental reason.
War.
Huh?
War.
War. Sir, what happened with Russia-Ukraine war? Why did not market fell? What happened Israel and Gaza war? What happened? Then why market will fall? What about FIs and DIs? Are they putting money in the market or are they exiting from the market? So market will melt down when money comes out of market. If there is a regular inflow of money in the market do not melt. So right now, are you looking FIs exiting? Are you looking FIs pumping money in the market? It is actually in this year, current year, DIs have put more money than FIs. Okay, which means FIs are shrinking in terms of the percentage of holding they used to hold almost 5 to 10 years ago. Okay, which means there is a potential signal. Another signal is your Trumpomania. Okay, tariffs. Why? Fundamental. Let's talk about fundamentals. We will be talking pure practicals, no books, pure practicals. We will just keep on, having a regular conversations with each other. Why Trumpomania? What he's trying to do? Is he a crazy guy? What he's trying to do? Wants to? Okay, go back to your college time when you have done economics. Go back to your economic times, in your economics times. How did you compute GDP? Sir, how do you compute GDP? You have consumption, private consumption, expenditure method. You have private consumptions, you have investments, FDI, you have government expenditure, and then you have net exports. Okay? So, which means what he's trying to do? He's trying to bring domestic consumption back to United States. What is right now United States doing, he's basically nothing but a financer. He's exploiting, okay? We will not also talk about political issues here. What he is doing, he is basically exploiting world resources, not utilizing his own resources. So he's basically kind of a financer. What he's trying to do, he knows that that is not going to last forever. What he's going to do, what he's doing, he's basically pulling markets back to United States to manufacture in US. Basically bringing back his own consumption. GDP first concept, expenditure method, consumption. Is India really strong? We have seen in COVID 7,500 levels to now 25,000 levels. Is India really strong? That strong? The answer is there in the numbers. Remember GDP formula. Consumption, investments, government expenditure, net exports. Are we positive on net exports? No, we are trade deficit. How much is the domestic consumption? Take two difference now. Pre-COVID, post-COVID. Pre-COVID, when it was not digital, do you able to compute all the consumptions when it was not digital? Now, when it is digital, are you able to capture all the consumptions? Mostly. So you have not done anything, in terms of policy. What you have done, you have digitized. When you've digitized, the numbers. So now you're projecting, okay, I am 3.2 trillion Indian market domestic consumptions. From the policy standpoint, I want to bring PLIs, more consumption. I want to bring foreign companies coming into India by giving them advantages, incentives, subsidies. Then I don't want to rely on defense imports. I want to make in India. I want to convert India into Bharat. Okay? With that, what you're trying to do? You're trying to reduce the trade deficit. Okay? Now I am also importing crude. What I am doing? Green energy, ethanol. There is another sector which probably, I'm not sure any one of you know. Do you know the use of briquettes? Yeah, briquettes. Pellets, right? What is the use of pellets? Generating power. India is 70% dependent on thermal power. What if I add 20% briquettes or 7% briquettes, which is agri residue? What is the problem with Punjab? During harvesting season, they burn residue, agri residue. Where it can be used? It can be pelletized, put in the thermal power plants. With that, you are saving coal, right? So policy is there to support the net trade deficit. That is where India is working on. Okay? Solar power, etc. Right? So, coming to numbers. Our GDP growth, by the way, IMF recent data suggests that we are going to surpass Japan. And we will be third largest. So, which means now we are not going to compare ourselves with Japan or Germany. We're going to compare ourselves with China and US. So let's compare with China and US. So we are growing at 7.4. What about US? 2.1. China, 5.4. So we are better than them. What about our new orders and output? No, see, remember GDP concept. C, consumption. What about your manufacturing PMIs, service PMIs? Okay? So we are still better than them. Okay? What about job market? What is happening with the US job market? Please see their unemployment data. Please see their unemployment data. Okay? So we are still better than them. And what about our inflation number? So compute GDP. There are two concepts of GDP, nominal GDP and real GDP. You factor in inflation. So inflation eats your GDP numbers. So now if your inflation is below the pre-COVID level, that means now there is a narrow difference between the real GDP and nominal GDP. So in short, macroeconomic-wise, macro data-wise, India is quite strong. So which means India is not going to, the markets is not going to go down because of our own fundamental issues. If market has to fall down, if market has to go down, it has to be because of external factors. Now imagine all the external factors I showed in the previous slide, all the external factors. Market have bounced back strong. So bringing to the same point, you have one opportunity in 5 years. Okay, which means if market is going down because of external factors, this is going to be an opportunity. This is going to be an opportunity. And we'll be looking for that opportunity. Why? Because there is a concept called wave analysis. Okay, there's a concept called wave analysis. Market typically works in a concept of 3:2. 3 bull waves, 2 bear waves. 3 bull waves, 2 bear waves. In my life, I have seen 1 bull wave so far. I cleared my CA in 2009, started my investments somewhere in 2013-14 when I realized that it is time for me to start investments. From 2013-14 till 2000, now I have actually experienced just 1 fall, which is the COVID fall. So I have more opportunities to invest. So I'll be looking forward for market fall to invest. Is India getting premium? Are we really enjoying the PE multiples premium? Look at the pre-digital era. We used to get 18.3 multiples, right? We all know the concept of PE, right? Price to earnings. Premium, PE means premium. We used to enjoy a premium of 18x. But after COVID, our average PE multiples is 20. Actually, today we are operating at 22.5. We have grown at 12% CAGR in past 10 years. 12%. Your fixed deposit gives you 6.5. Okay, this is 12%. So look for market for investments. How to invest, I'll tell you. If you are new, then also I'll tell you. Where we will go? If we continue at this pace, where we will go? We'll talk about that also. Now, let's see, because ultimately, market, will continue to go up if the money continue to pump in. So it is very important fundamentally to see what is our FIs and DI participations in the market. If FI participation is going down, is DI supporting? You see, back in time, FIs used to hold around 20-25% of the Indian market shares. Now the percentage have come down to 17%. But then why market is not going down? Because the confidence of retail investors has gone up. 157 million demat accounts has been opened. 157 million demat account. As we are speaking, more people are applying for more demat accounts. Okay? Look at CDSL. This is not for an investment purpose on record. I first pitched CDSL when CDSL used to trade at 257 rupees. And I'm still holding it. Again, on record, this is not for investment purpose. So, DIs have, participation has gone up significantly in the domestic market. Indian market is really maturing. What is the percentage of retail investments in United States? 55%. 55%. Where are we? There's still long way to catch. There's still a very long way to catch. Apart from all the economic externalities we spoke about, let's talk about one valuation factor that could be a reason when market may melt down. That is our own valuations. Today we are trading at 2.1x of our GDP. Our current market cap is 2.1x of the GDP, which is quite high. Let's see where the other countries are sitting. And I'm saying that we will compare only with China and United States. Where China is sitting? 0.58. Half. Where United States is? 2x. So we are in middle between China and United States. This brings me a very important question. Can I invest in China? I'm here to earn money, right? I'm patriotic, by the way. But can I invest in China? You can. Are there mutual funds available which can help me invest in China? There are. Do your market research. So sitting in India, you can invest in China using mutual fund routes. Okay? Because they are still trading at half of the valuation. Let's see what the matrix says. If your ratio is less than 70%, you are significantly undervalued. And if you are above 130%, you are significantly overvalued. So where are we sitting? We are just sitting near to the overvaluation. And think, how can we invest in Chinese market? Let me also quote another example. Back in those semiconductor issues, couple of years ago, there is, by the way, a company called Taiwanese Semiconductor. Happens to be world's largest semiconductor company in the world. I cited there is an issue of semiconductor and people will start investing in semiconductor. What are the options do I have to invest? There is a fund called HSBC Asia Pacific Fund. If you happen to see the Asia Pacific Fund, they have around 5% money allocated in Taiwanese semiconductor. What are the other options do I have in India? Semiconductor. You have Keynes technology, you have MOS chip. So you have to do your market research. You've done your market research, identify the stock and invest in that stock. Okay? Where Keynes is sitting today? 5,000 levels. Used to be at 600 levels. Okay? So yeah, we are drifting towards being overvalued. So we have an option to invest when we have to do our market research. Let's talk about where do we go. If we continue with this pace, probably by 2030, where we can see ourselves. So there are three probabilities I have put here. Probability 1, You continue to grow at a modest 6.5% growth, which is stated in all the economic forums, which is also seconded by IMF that we will grow at 6.5%. And assume there is no dollar depreciation, we will continue to grow at 6.5%. We will be reaching up around 28,000 level in 2030. Oof, we are sitting at 24,000, 25,000, which means there is no growth for next 5 years. So by the way, there are 3 types of market falls, or 2 types of market falls, sorry. One is a price fall, where price goes down. The second type of fall is a time correction, where market price-wise don't go down, but it consolidates. That is called a time correction. So there are 2 possibilities. One, either price-wise will go down and catch up back at 28,000. Second option, we don't go down. Because the fundamentals are quite strong, because of all the external factors also, we probably don't go down and will stay till 24,000 and then eventually reach to 28,000. Okay, that is probability number 1. Probability number 2. We start growing at 7%, dollar index depreciates a bit. By the way, dollar index, in depreciation of dollar index, RBI intervene. Okay, RBI also intervene to prevent rupee appreciation. Okay, so dollar depreciates by 4%, we grow at 7%. Where do we reach fundamentally? 34,000. Assume the Make in Bharat concept really kicks in. See, you see a budget, very good. Okay, first, budget came, government says, I'm going to spend trillions of rupees in government spending, end up only in billions, actual spending. So when the budget came, typically prices potentially shoot up and then later on it starts coming down. Because in reality it is not happening. So now if government starts spending as they are committed to, and we grow at 10% CAGR, continue our same growth story, we can actually reach to 40,000 levels. So now these are the 3 levels in which potentially we may end by 2030. So this brings to me the following questions which people usually ask. Okay, 1, does market always follow fundamentals? We spoke about fundamentals in past 5 slides. Does market always follow fundamentals? Bullshit. It doesn't follow fundamentals. Let me give you an example. There's a company called, I'll not take the name. There's a company based out of Andhra Pradesh. Okay. They used to manufacture LPG's components. LPG's components like pipes on top, whatever it is, regulator, etc., etc. And they used to give service also for LPG. Their ROCE, or return on capital employed, was 3%. Their cost of capital was 15%. Should I invest in that company fundamentally? Obviously no. That stocks used to trade at 3 rupees. But today it is trading at 45 rupees. How? It should trade fundamentally, right? Where is fundamentals? Super, sir. This brings to me a very important point. Whenever I'm investing in any stock, what do I need to see? I need to see their market cap. If their market cap is less than 1,000, it can be manipulated. Right? What is 1,000 crores these days? A bunch of CAs can come together and say, okay, let's go and manipulate a stock. Let's pool money. Let's take client money also. 1,000 crores, let's buy all the shares of this company. We'll take this company to 100 rupees and then we'll sell. Yeah? Possible, right? So, we should not invest in a company where market cap is quite small and we can know that this company can be manipulated. Okay? Then where should I invest? I'm a beginner, I don't know. You are saying stock can be manipulated. HDFC, you are saying it is not moving from past 2-3 years. Reliance is not moving. All large caps are not moving. TCS is coming down. Mid caps and small cap are melting like anything. But you are strong on India. Where will I invest? Let me invest in fixed deposits. 6.5%. That is safe. Let me invest in fixed deposit. For next 4 or 5 years, I'll invest in fixed deposit. Let me wait for market for meltdown, and market is going to 40,000. Oh, I saw market 5 years ago, 24,000, today sitting at 40,000. This is the normal thought process that we get. So then where I should invest? If you are a beginner, look for index funds and ETFs. If you are a beginner, why? Now take a case of Yes Bank. Back in that time of Rana Kapoor, okay, when Yes Bank used to trade at 300, 400 rupees, it came down to 5 rupees, SBI had to bail out. Okay? Yes Bank was part of NSE. What NSE did? It kicked Yes Bank out and pulled IndusInd Bank in. Which means NSE doesn't want any bad asset to be in the books, to be NSE. NSE want all the bad to be thrown out and good can be pulled in. So which means market may not correct. One stock probably can correct, but market may not correct. Okay? So I can use the ETF routes and index routes to invest, and I will continue to invest on SIP mode. If I see any huge drop, like this guy said, every 4 years, 5 years, there is one major crash. If I cite any major crash, what will I do? I'll put again lump sum money in ETF and mutual fund. I will continue to invest on SIP mode. When I see a major crash, then I will put some more money and accumulate. That is the use of index funds and ETFs. Today, Indian ETF market have really grown. Back in times, we had only 3 types of ETF. One Nifty ETF, one bank ETF, and one small cap ETF. Maybe mid cap ETF. These 3 forces. Today, you have sectoral ETFs. You have consumption ETF. You have IT ETF. Okay? So which means ETF market have emerged. Every month there is a report comes from NISM, National Institute of Security Management, which basically tells you how much mutual fund, how much total value of mutual fund has been put in the market. Okay? Look at their report. 88% corporates only invest in ETFs and mutual funds. Which means who is investing the balance 12%? Only 12% come from retail. Because retail wants stocks, right? 2 rupees stocks, 3 rupees stock, 5 rupees stock, that can become multi-bagger, but eventually become zero. Right? In retail typically look for penny stocks. But corporates don't look for penny stocks, right? Corporates looks for value. Remember, if anything is expensive today, potentially will become more expensive tomorrow. If anything is cheap today, will become more cheaper. Take an example of any flat. Take 2 flats. One very posh, okay, worth of 50 crores. Another, flat, 10 lakhs. You would say, oh, I don't want to invest in 50 crores. I want to invest in 10 lakhs flat only. You've bought 10 lakhs flat. Now, after 10, 15 years, you realize that flat have become a slum. Nobody is want to come and live in that flat. You go out in the market and want to sell one flat in 15, 20 lakhs, but you're not getting buyers. Why? Anything which is cheaper will become more cheaper, remember. So if you are buying any penny stock, thinking that this penny stock will become multi-bagger, okay? 1 out of 100 cases, probably you can get multi-bagger. But out of 99 out of 100, it will become 0. So don't think of penny, 5 digit, 10 digit, 15 digit. Think of a value. Does this stock has a value? Does this company has a good balance sheet? Is this balance sheet of this company is going to become more stronger or will become weak? Okay? Now you are matured. You have done, investments in mutual funds, ETFs, etc. You've been in the market from past 2-3 years. Now you want to explore. Now you know what is the theme of the market. Then also, your first step to invest is in large caps. Okay? Look for large cap stocks which are not manipulative. I can take few names of large cap also. I don't want to take it. IndusInd Bank. Okay. Yeah, so there are cases also, but then you have to continuously monitoring. It is fine. See, consider yourself, you are an investor. You are an investor, right? Think of those private equity investors who invest in startups. All of their startups turn into multi-baggers. No, right? They invest in 10, 9 probably can go down in drain. 1 goes to IPO. All of their money which they have invested, all the return comes from 1 stock only, right? So there can be a bad stock in your portfolio. It is fine. Please don't just continue to hold a bad stock and keep selling the good stocks. Basic problem of investors are when they see their portfolio, oh, 1 stock is giving 5,000 rupees profit, let me book. Otherwise, this will also go in loss. The other stock which is in 50,000 loss, they continue to hold. Oh, this will go up. And when it will come into my cost, then only I will sell. Very good. You did not allow the 5,000 profit-making stock to reach to 50,000, but you sold the stock, but you're holding the stock which is in 50,000 loss, right? Psychology. So always start with large cap. That's the reason don't start with mid cap and small cap. Now, after 3-4 years in the market, now you know that which company can probably do good, which chart is looking good. I know basic chart reading, etc. Now I can go small cap and sectoral. So this is a process. It is not like, oh, I've got my money, let me invest in mid cap and small cap. Let me call few guys. कौन से stock में invest करने का है? And they give you 4-5 tips. You invest in all those stocks, all are going down. It's a process. How long can I invest? This is a typical question I get. Sir, you are suggesting a stock to buy. What is your timeline? Sir, this will become double in next day, sir. So tomorrow this will become 100% returns you will get, sir. Is it possible? No, right? In next 3 months, sir, this will become multi-bagger 3x returns. No, sir. Not possible. Okay? For how long I need to hold a stock? Till the time fundamentals are good. So that is the reason I have put a 0 timeline for holding a stock. You can continue to hold a stock till perpetuity. Subject to balance sheet is good, numbers are coming good. We all are CAs. We know how to read the financials. We know how to read the quarterly results. If quarterly results continue to perform, we will continue to hold the stock. If quarterly results starts coming down, then we will hit our stop loss, fundamentally. But technically, bullshit. Technically, when price shows there is a potential sell-off, I'll sell. Technically, I'll get to know what is going to happen in the market well in advance. So technically, So technicals are basically leading indicators. Fundamentals are lagging indicators. Okay? Yeah. Now we know that, okay, ETFs, mutual funds, we know how to buy large caps. We know that there is a step, there is a process to reach to a mid cap and small cap. We know that stock, we will continue to hold till the time stock fundamentals are good, balance sheet is good, etc., etc. Okay, but sir, how to identify a stock? How many stocks are listed on NSE? Hanji? Anyone? Wild guess, wild guess. Okay. So we are in between 2,000, 3,000, 2,000, I think 900 or something. Stocks are listed on stock exchange. So this means out of 2,900 stocks, I need to identify one stock will become multi-bagger. In 10 years, my 1 lakh rupees will become 10 crore rupees. Out of 2,000, I need to find one stock. How it is possible? So then what fundamentals are for what? Okay. So important is, now let me drill down how I will identify a stock. Whether that stock will become a multi-bagger or not, that depends upon the fundamentals of that particular stock or that sector. But let me help you how to identify a stock. First of all, you need to understand the business. Okay? Assuming I know that, a couple of years ago, I know that ethanol is going to be the next fuel. May not be 100%, but 20%. So the current output of the sugar stocks is likely to increase. Their capacities to get exhaust. And then they have to add new plants. So I know this. So what I'll do, I'll first do a sectoral research of how many sugar stocks are there in the market. Then I'll drill down to, out of this bunch of 10 stocks, now I'm not searching 3,000 stocks. I'm searching sectoral. Out of 20, I'm searching one stock. Right? So first I know what is the business. First I have to know what is the business. Then after knowing the business, I will search down to that particular sector, and out of those sector, I will do a market research of those particular 20 stocks. You also need to know, is there tailwinds and headwinds in that particular sector? Tailwinds and headwinds in that particular sector. For instance, how many of you know IEX? Indian Energy Exchange. Every time this stock starts going up, they say there's a news of market coupling. So, you know that there's a market coupling coming. Every time this stock starts to perform, because of market coupling news, it starts coming down again. But why? What is the impact of market coupling on IEX? Do you want a stock which trades at a different value in BSE and trades at a different value at NSE? You want same price, na? So why energy exchange should have a different price? IEX different price, PRX different price, other exchange different price. Should not be, right? So fundamentally, is government asking something different? No, right? They're asking what is right for the consumers. But then understand the balance sheet of IEX. IEX hold 85% market share. And if there is market coupling, they will lose the price parity. So a good balance sheet may not in future remains good. May become a highly competitive price market. So you will not enjoy the same profit. Please go and see results of IEX. How many of you have seen a company which reports, let's say 100 rupees of revenue, reports 90 rupees profit, net profit? Go and see results of IEX. You will see this type of results. Such a profit-making company, stock is not moving. Why? Fundamentally strong, right? Why it is not moving? Because market is anticipating that the balance sheet which is looking too strong today may not look that strong. So market is discounting the future of that stock today. This is what market does. Market always discounts future today. Okay? Now, very important, quality of a promoter. Okay? I will not take the name of this company because I have supported them during the IPO process. So I will not take the name of the company. But I know the background of the promoter. Okay? He initially started off doing business in Abu Dhabi. Business failed terribly. He had taken huge amount of loan for that company. He literally he declared himself bankrupt. I can't pay. Then he reached out to a private lender because apparently he had taken some personal loan also. So he reached out to a private lender. He said, please bail me out of this mess. Private lender said, okay, 18% ROI, take a loan from me. Said, okay. He took a loan, repaid that, his personal guarantee loan of that Abu Dhabi company, and he exited Abu Dhabi personally. Company is still there. Now he had some Indian companies. He said, I also have some loan in India, and I don't want Abu Dhabi is also out. I don't want India, I should also go out. I want to go public for the Indian company. Apparently, there is already a relationship between the Indian company and Abu Dhabi company. So what he had to do? What he had to do? He had to cover it. He had to cover it, right? So that the Abu Dhabi company looks separate, the Indian company looks separate. Everything is possible. Okay, so he did that. After that, there has to be change of directors, and blah, 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 all that happened. So now the Indian company looks silo. No relationship of the promoters with the Abu Dhabi issue and Indian issue. He also exited out from the Indian company saying that, okay, this is not my baby, I've sold my company to so-and-so person, I am not part of this, let's take the company to public. The company went public. Okay? 330 was the issue price, today trading at 550 or 60. He got decent amount of money. He still did not pay the loan of Abu Dhabi. Okay? With that money, he took an open offer. He used that money buying his own personal assets, did not pay the loan. The stock is not moving from past 5 years. Indian company has a profitability of 30%. Okay, does around 1,000 crores of top line, 30% profit. Stock is not moving. Why? Retail investor don't know. But FIs and DIs, for them the market is small, right? Everyone know each other. They don't want to put money. But the stock is not moving, retail investor is stuck. So the promoter, quality of promoter is extremely important. Now, very unfortunate situation happened with Air India. Very unfortunate. But you see, the same day, Tata immediately came and announced, very cleanly, very openly, this is what has happened. We are open for investigation. This is called a clean management. If you have a very transparent, very clean management, please go and invest in that company. There is no problem. Fundamentally also, technically also, there is no problem. If you have such a clean management, please invest without looking into the company's fundamentals and technicals. Why? First time when a promoter goes in the market, for all the startups who are here, any investor, any promoter who goes in the market for the first time for seed funding, does he get money basis his idea? Does he get money basis his historical numbers? Does he have any valuation? No. Then why does he get money? Why does he get money? On his face value. On his face value, you get the money. Because of he probably has a good, relationship with the investors. He know how to do the business. He has a good idea, right? He's clean. He has no issues. His background is also clean, right? That's the reason he get the seed funding. So similarly, when you are investing, you are putting your money, you are becoming investor now in the company, right? You should know about the promoters. Very important. But having said that, fundamentals means bullshit. I will choose technicals over fundamentals. I will not choose fundamentals over technicals because I don't know about all the promoters, right? I cannot do and go at CIBIL check of all the promoters where I would like to invest. So I'll follow the technicals. That is the reason you should always follow technicals over fundamentals, because technical will start reacting first, then fundamentals. Okay? Fundamentally the company could be extremely strong, but you don't want to get stuck in the price action. So always look for the breakouts. Now, how to look for a breakout? There are multiple indicators. There are more than 100 indicators. There are more than advanced theories. So I mentioned about some ratios. I said, remember 28%, 38%, 66%, 56%, 50%. Why I said? Because there is an indicator. There is a concept called Fibonacci. Fibonacci was a mathematician. Okay? Now, this ratio, 66%, are called golden ratios. If a stock who is coming down, taking support at 66% of drop from his peak and sustaining there, and if the stock is sustaining there, it is potentially possible that the stock will reverse from there and go to 1.6x from that same price. Simple. If you're throwing a ball, if you're dropping a ball, it will do a small bounce and stays there. But if you're throwing the ball, the inertia will push the ball back above his previous prices point. Okay? So these are some of the technical concepts. Okay? If, let's say, for example, there is a stock called BASF. I identified this stock when the stock used to trade at 4,000, dropped to 2,000, stayed at 2,000, which is a golden ratio 0.66. Stock waited there for some time, bounced back to 8,400 levels. Okay? Pure Fibonacci play. These are some of the technical indicators. Another question which typically comes, I have identified stocks, I have identified sectors I would like to invest. What should be and how should my portfolio look? You have 3 examples in front of you. Do you want to put your entire money in one stock? Answer, please say yes or no. Why? Because that is undiversified. You're putting your entire risk in one basket, right? It can potentially become zero. You have another portfolio, this one. There's a list, and beyond this, there are also 35 more. Okay? Which means I don't have a time to see 50 stocks. Can I see 50 stocks every single day? It is just like, buying an NSE fund. Can I see 50 stocks every single day? Answer is no. This theory is called diversified investor. Diversified investor. You are not married to one stock. You are not married to a portfolio. You are diversified to your portfolio. Okay? Then what should be the ideal portfolio? The ideal portfolio is that I have 25 max stocks, 20-25. Properly segregated between mid caps, large caps, small caps. Okay? Maybe some ETFs. Can I put my entire money in stocks? Answer is still no. Can I put only 2 instruments, stock as well as debt? Answer is no. Because remember, you get an opportunity to invest once in 4 years, 5 years, right? So you should always have cash and cash equivalent to the other people who are not CAs, I used to say cash. But to CAs, I can say cash and cash equivalent. Okay? So cash and cash equivalent, you should have minimum 10%. So that when there is any fall, you should have sufficient cash or cash equivalent available to withdraw and to put. Having said this, you should always have insurances. Life insurance, medical insurance. Okay, for uncertainties. Don't put your entire money in stock market and say, sorry, I cannot go to the hospital because I have my money put in Reliance. Reliance is not moving. Okay, so, yeah. Do you typically get call every single day? Sir, I am calling from this company. We give advice, option advice. Please invest, right? Or probably get a message, sir, this stock we have invested, he's just 2 rupees. Please invest in this stock. See, now I'm also doing CSR, okay? I'm educating people to not to attend such calls. So this is for that. Please don't entertain such calls. Don't invest if you get a call. Okay, I am putting my money in options. I will suggest you also, please invest. Don't do all of that. Do your own market study and research and then invest. Now you know how to do the market study. If you are investing in ETFs, mid-cap funds, large-cap funds, etc., you should know how the Indian economy is going. If Indian economy is growing, you should invest. And you know how the Indian economy is growing? When the consumption is growing, FDI is coming in India, government spending is happening, that means Indian economy is growing. I will continue to invest in India. Now you know how to invest in stocks. I will identify a sector, which sector is looking good. I'll start searching out for those stocks and then I will invest in those stocks. Okay? So there's no point at entertaining such calls. Now I'm coming to that topic which has eroded 90% of the wealth of the investors. That is options. I'm not going to talk about futures. I'm going to talk about options. Still everybody loves options. Why? Easy money. Right? Easy money. I'll start with some examples. Okay? You have to give the answers. And then I'll tell you how to solve it. Nifty closed, let's say Nifty closed at, and I need answers from you. Nifty closed, let's say at 24,700. You think Nifty can go 25,000 in next 2 days. Next expiry is on 19th. Okay? Next expiry is on 19th. You think in next 2 days Nifty can go to 25,000. So what options you will buy? Call options. Which strike? 24,700. He said 24,700. So now 24,700, spot is at 24,700. He wants to buy 24,700 strike. Okay? Is this at the money call, in the money call, or out of the money call? At the money. He wants to buy at the money call. Let's say the premium of at the money call of 24,700 is 300 rupees. Is 300 rupees. Okay? Again repeating. He is bullish on Nifty. Nifty is trading at 24,700. That is a spot. He says he thinks Nifty can touch 25,000. He buys at the money call of 24,700 strike, which is trading at a premium of 300 rupees. Okay? 3 days gone. 3 days gone. Market moved from 24,700 to 24,750. Tell me how much money he has lost. He lost 250 rupees. Why? premium decay. So in the options, they had two theories. One, time value of money. We called it as theta. And the difference between spot and strike, that is called no, that is not the premium. Premium is the entire money you are paying, right? There are two concepts. One is value for money and second is time for money. So what you got 50 rupees because you invested 300 rupees, right? You're left with 50 rupees, which means you lost 250 rupees, but you still have 50 rupees which you carried home, right? This is like going for gambling and you bet on a horse and say this horse will come first. But that horse came second last. They say, okay, still he's not last, but you still get some money, and that money is 50 rupees. Okay? So you came home and said, okay, yeah, today I have saved 250 rupees. No, I have saved 50 rupees only. Okay? So these two concepts are very important when it comes to options. Now let me tell you, how do we trade? Okay? For us, very important is to see the technicals. Let's say this is the technical chart. This is probably 2 days old, but we can refer this. This is a technical chart. You see on the top there is a small line, right? Green bar and then there is a small line on top, right? First one here, right? This is a small line. Correct? We call this as wick. Wick means at this price, there is no buyers available. So second time also, exactly at same point, there is a small wick again. That means buyers are not available. We come third time, there was some price action which has happened, but then the price action again failed to hold the same price. That means buyers are not available. So that means at 25,065 levels, buyers are not available. What should I do? What should I do? Can I buy put? Again, same problem. I'll take that example of put also. Same problem, sir. I'll buy 25,000 put, anticipating it will go to 24,500. It doesn't go there. I'll end up losing 250 rupees. So what do I do? I'll continue to lose 250 rupees every time. No, right? I'm here to gain money, right? I'm not here to run an NGO. What should I do? Looking at the price action, I know 25,065 is difficult to hold. What will I do? I will sell 25,000 CE. That means I will sell 25,000 call. 25,000 call, let's say, is trading at 100 rupees. And I know it is not going to go back to 25,000, it will cross 25,000. I know because the historical data says 25,000 is a strong resistance. I know it is not going to go up. So it is a calculated risk. What we were doing earlier, it was gambling. Because I am expecting it is not going to go to, it will go to 25,000, therefore I bought a call, right? That was gambling. What I'm doing now, I am taking a calculated risk. So what I did, I sold 25,000 call. So by the way, just that everyone is at speed, buying a call means I'm bullish. Buying a put means I'm bearish. Selling a call means I'm bearish. Selling a put means I am bullish. Okay? So I am bearish at 25,000. So I will sell 25,000 call. I know it is not going to go back to 25,000. And therefore, I earned 100 rupees. Because I sold first and then I'm going to buy. I sold at 100 rupees. I will buy at 0. So 25,000 rupees or 100 rupees is my profit. Let's take another example, which is one of the most brilliant way to trade in market. One of the most brilliant way to trade in market. We call it as arbitrage. Now imagine market is trading at 24,700. Okay? Absorb the question again. Market is trading at 24,700. Premium, current premium is, let's say, 200 rupees. That means where can market go to max? What people are expecting where the market will go? 24,900, right? That is where maximum market will go. Now I know that market upside is till 25,000. I know. Okay? And I also know that the trend is looking downwards. Okay? However, I have some insights using indicators, other indicators, that market can still hold at 24,700. It is not going to go above 20, or it is not going to come down below 24,700. What is the premium I want to play with? 200 rupees. I want to play with the premium of 200 rupees. So what I'll do, I will write my premium to the extent where I know it is going to hit the spot, or we are going to stay at the spot. Okay? Let's say what I said, market is going to stay at 24,750. I know it is not going to go down. 24,700 is what? Is the current spot price. What I'm going to do, I have to enjoy this 200 rupees premium, and I will exit my position when it will at 50. Okay, so what I'll do, I'll write 200 rupees, continue to watch. The moment it comes down to 80 or 70, I'll exit. I'll give you another example. That example probably could have been a little tricky. Other example. Spot is trading at 25,000, assume. Spot is trading at 25,000. I know 25,065 is a strong resistance. It is not going to go up. 25,000 strike is trading at 100. Which means how much is the unusual premium? 25,000 CE is trading at 100 rupees. Spot suggests 25,065 is a very strong resistance. How much is the unusual premium? 35. So what I'll do? I will write this 25,000, wait 35 rupees to come down. The moment it reaches 65, I'll exit. That is called writing the unusual premiums. So we find those strikes where there are unusual premium build-ups. Okay? That is how all large F&O traders trade. That is why algo trading was getting banned. Okay? Algo does all these activities. You have to give your command. Our sir is not there, Shravan sir, who was telling us about AI. Okay? In algos, you put these commands. Find unusual premiums. Then you write unusual premiums. Market which is expected to go up, unfortunately not coming down or not going up because there is a lot of pressure of call writers. So the game of options, future and option, is to find unusual premiums and write unusual premiums. So for this, you need to practice a lot. It is not like somebody has told you start tomorrow, writing calls and end up going in losses. So find those unusual premiums, write those unusual premiums, and enjoy the gains. Second concept in F&O option comes, is to read, how to read the NSE option chain data. What did I show you technically? 25,000 is a strong resistance, right? See what data says. On the left-hand side, you have call writings data. This OI is called call writing. Okay? People who are bearish in the market. Right-hand side OI means people who are put writers, who are bullish in the market. So you have to see where the number is high.
at which strike the number is high. Let's take the left-hand side first. Call OI number. See where you have higher numbers. 25,000. 57,000 people are sitting at this strike to put pressure on it. That means they don't want this price to get break. Supposedly, if it crosses, you have a next immediate resistance at 25,100, where 65,000 people are sitting. That means if this is taken out, they will start pushing market down. Okay? So reading and analyzing NSE option chain data is very critical. Look at the right-hand side of it. Now, by the way, I have taken this data and chart before yesterday's fall. We all know, right? Yesterday market opened at 24,500. There was a sharp 1.5% drop, and then market recovered. Okay? So this data was taken before that, only for example purpose. Why market recovered from 24,500? Because you had put writer sitting there. Immediately when market saw a 24,500, there was short unwinding happened at 24,500. Okay? There was short unwinding. So this is called data analytics. It is not about charts. It is not only about fundamentals, but it is also about data. So data showed that 24,500 has a very strong put writing. Market started recovering. So you should know, when you are trading, you should know what level has how many call writers and put writers. So I was giving some examples. Let's take an example of this naked call buying, which is what he said, right? I'm going to buy 24,700 call, irrespective trading at 300 rupees, I'll buy it. Good. That is called speculation. Okay? Let's see what happens if we do the same example. This is a practical example. Assume spot is trading at 24,800. That is your spot price. You have a feeling, you have a gut feeling that market is bullish. How will you get the gut feeling? Looking at charts and blah, blah, blah. You have a gut feeling market is bullish. You bought 24,800 CE as 219 rupees. 219 rupees you bought 24,800. Which means where market expected to hit? Till what price market is expected to hit? If spot is at 24,800, you are buying a strike of 24,800 at 219 rupees, where market will expect it to hit? 25,019. You need to add the premium in the strike. You have to add the premium in the strike, which means market is expected to hit 25,019 rupees. Okay? Now there are three options. Let's say where at the time of expiry, where market closed. Option number 1, market closed at 25,100. That means your call become in the money. Option number 2, market closed at 24,900. That means still out of the money, or still at the money. Option number 3, market dropped below 24,700. Now let's see what will be the profitability situation of yours. What you need to do, you need to add these revised LTP. LTPs means the price, closing price. You bought something at 219 rupees. The current market price of that becomes 300 rupees. Okay? How much money you gained? 6,000 rupees in option 1. Option 2, irrespective you bought 24,800 strike, the price was closed at 24,900, you are still in loss. You end up losing 8,000 rupees. Option number 3, market dropped below 24,800, and as a result, you lost the entire money. Okay, that is the problem of premium decay. Same example, call writing. Call writing is even more riskier, by the way. Because call writing, you're selling first and then you're buying later. If you sold something and then it goes up exponentially, then you are in loss. We'll take the final case, which is the most important case and sure shot profit making case. That is called the covered call. Okay? In this, the chances that you will lose money is negligible. That means every trade you take, there is a possibility you'll make money. Now, I said, in this, we'll take an example. Spot is trading at same 24,800, strike 25,000, okay? I have checked charts. Charts say 25,065 is a strong resistance. What I'll do, I will sell first. I'll sell first 25,000 call. I have sold it. Price was, let's say, 121 rupees. At what I sold was 121 rupees. We said that the spot closed at anything at 25,000 or below. What I need to do, I need to cover it. I need to buy any strike which is above 25,000 so that I am at hedged position. I sold 25,000 call, I hedged 25,200. I sold 25,000, I bought 25,200. Okay? Because remember the NSE option chain data. I said 25,000 is a resistance, and after that also, near 25,100, there is another resistance. So this price gap of 100 rupees, there are multiple resistances. So I sold 25,000, but I end up buying 25,200. So that I am now arbitrage, or I am now hedged with that 200 rupees gap. So option 1, irrespective market closed above 25,000, I am still in profit. And let's say if the price drops below 25,000, I am still in profit. So I'm profit in both the situations. So then why SEBI is saying 90% of people who does F&O ends up in loss? You can actually be in profit in all the trades. So without proper knowledge, if you do options, you will end up only in losses. So that was my time. Thank you. And I have actually created a group because I know a lot of people can ask, a lot of people might have a lot of questions about markets. So you can scan, and if at all you want to join the group. I typically give every single day a view on the market. There is Forex view, there is market view, etc. Feel free to join. And if there is any question, I'm happy to answer.
Asking any one of these.
I said no stocks. I said no stocks.
Stock market are subject.
Anyone, any questions?
Please analyze the stocks before you purchase. Adhe one.
Yeah, Bloomberg. Significance of Bloomberg terminal. Yeah, you get lifetime live streaming data. For example, you know who is buying, who is selling, etc., etc. All of that data you typically get, but that data is available on free websites also. No questions? Hot topic, but no questions. So 2-3 sectors. One is obviously power sector. I am no longer, by the way, bullish on defense sector. Defense sector is already over leveraged, over premium is built up. Power sector is something which is still quite attractive. Both. Even if you see NTPC have also come up with NTPC Green. Okay. Even NTPC, the conventional power space also is now using this pellets, etc., ultimately reducing the cost. So power is one, which I really think that has good value. IT as a sector have actually consolidated quite a bit. So if at all next rally has to come after this fall, is likely to come in IT.
Defensive win after war.
I'll not answer IndusInd Bank. Pharma, for sure, there are a lot good stocks in pharma, which are still available at very good valuations. Still, I'm not going to take the name. You have Andhra-based one company, okay, which is doing extremely good. They are growing at around 25% CAGR. A lot of API, facilities, formulation facilities, and margins are also great. So I expect, such, and that's large cap also. I'll not able to take the name.
Sir, can you please disclose the names of the companies where your clients are buying as part of disclosure so that we
Okay, so at this point, I have suggested my clients to keep a reduced position. Okay, to keep like some cash, sit on cash, and mainly focus on large caps. We have actually liquidated our entire defense portfolio. Now we have only some mutual funds available, which is predominantly defense related. Stocks we have out of defense. We are bullish on green energy and all the green energy stocks. In fact, the financiers also have green energy stocks. We are bullish on PSUs, public sector banks, especially after the liquidity ease out for the PSUs. In fact, PSUs funds also we are bullish.
like PSU funds.
PSU banks.
Sir, defense sector, you already stated that it is why you are liquidating. Is it
It's
Overvalued.
Wars are happening? And even in India also.
We are still trading at the highest PE on defense. Let it come first. Huh? Unlisted, look, NSE IPO, let it come out first. There's lot speculation about whether it'll come, it'll not come, etc. NSE, he's talking about NSE IPO. There's lot speculation whether it'll come, it'll not come. It filed DRHP. Sometimes BSE goes and starts creating issues, etc. So let it come first. Huh? Trading session. Yeah, sure. For sure, if they want, I can have a trading session also.
No, we understand that so what exactly you are looking from Chetan sir? I believe once he comes out down the stage, and it is off the record, then we have few moments. So we'll conclude here so that he can have one-on-one, so that he can also freely express once there is not online. Okay. Sir, that sounds good, sir?
Yeah, sure. Thank you. Thank you very much.
That's a very practical session we had, sir. Thank you for enlightening us. Now I request CA Narayana Garu, Chairman of Vijayawada branch, along with our senior members, CA Raghav Gupta Garu and CA Krishnarjan Rao Garu to present a memento to the speaker.
Hello. We have validatory session. Once this felicitation is completed, I request to please stay back.
Wait for 5 minutes. Now I request CA Manish Kumar Jain Garu, Secretary of Vijayawada branch, to give a vote of thanks.
I request my managing committee, Chairman CA Narayan Garu, Vice Chairman Jayant Garu, Treasurer Pavan Garu, MC members, Sikasa Chairperson Vanilla Garu, MC members Venu Garu, Ajay Garu to be onto the stage. So, as we draw the curtain on this literally enriching and professional rewarding 2-day national conference, Gyan Varshita, it's give me in place pleasure and honor as a secretary of our Vijayawada branch to vote of thanks on behalf of organizing committee. First and foremost, we express our heartfelt gratitude to our dignified chief guest, President CA Charanjit Singh Nanda ji, and chief guest of honor, Vice President CA Prasanna Kumar Garu, SIRC Chairperson Revati Garu, Vice Chairman CA Subbarao Garu, and RCM Tirupati Garu, Deepak Ladda ji, and Mandava Sunil Garu for gracing this conference with their presence and valuable insight. Your inspiring words have truly set the tone and added immense pleasure to the entire program. Thank you, sir. I sincerely thank our eminent speakers, CA MP Vijay Kumar Garu, CA Devamira Das ji, CA Gururaj Acharya Garu, CA Bhanu Shekhar Garu, CA Arpit Haldia ji, CA Saran Kumar Garu, and Chetan Bhasin ji, who have shared their deep knowledge and perspective with such clarity and passion. Your sessions have empowered us with new learning, fresh ideas and practical tools, staying true to spirit of our today's Gyan Vasishta. To all our delegates and participants who have joined us from various places, parts of the country, your enthusiastic presence, active participations, curiosity have been the soul of this conference. Thank you for making this a true and vibrant and engaging. A special thanks to all the office bearers of ICI, Central Council members, Regional Council members and past chairmen who have unwavering support and guidance have made this event possible. I must also appreciate the efforts of our travel committee. I request travel committee members, CA Bhuma Narendra Garu to be onto the stage, Anna Maniratnam Garu to on to be the stage. I request my managing committee to honor Narendra Garu and Maniratnam Garu for their efforts in making that speakers all the travel arrangements by them. So, our next sweet voice who has handled all the schedules of our program, our MOC team, CA Narendra Garu, Sojanya Garu and Purna Garu to be onto the stage. Sorry for the break. I should be on the photograph, so I have gone there. I request my MOC, CA Narendra Garu, Saujanya Garu and Purna Garu to be onto the stage. My voice is not such sweet, but I request you all to be onto the stage. That's why I'm saying. MC members, we can't honor ourselves. So next, From morning, they have been with us, Sikasa team, Vidita Garu, Avanti Garu and Sai Nivas for helping us in every part of our event. Thank you, students. Thank you very much. And my branch staff and our branch staff, Ramesh, Suresh, Ramurthy and Sai for all the behind works they have done, dedication and ensured ran smoothly and professionally. I heartfelt thanks to our sponsors, Tumula Global and Consultancy CAT, Ram Mohan Rao Garu, to be onto the stage.
Sir, you are the sponsor.
Himaja Constructions, Chalaseni Suresh Garu. Bloomingdale correspondent Vijay Babu Garu. Next Gen Diagnostic Dr. Tirumala Rao Garu, sorry. Bank of Baroda and Elon for supporting our event. I request Suresh and Babu Garu partner Naidu Garu, Murli Garu and Purna Garu for arranging our sponsorships. Sir, please be onto the stage.
Naidu garu.
Sir, please, sir.
Please.
సార్ తీసుకురా మీరు కూడా
Sir, randi sir.
సార్ నువ్వు ఇద్దరే ఉన్నారు తీసుకురా
Sir. Sir, randi sir. We thanks our sponsor for their generous supports. Your association has greatly helped us evaluate and quality and outreach of this conference. Thank you very much, sir. I request Naidu Garu. Naidu, sir. GSR sir, to be onto the stage for arranging such a knowledgeable speakers and
Please come on to the dais, sir. రావాలి భలేవాడు సార్
The event organized by Professional Development Committee, ICAI, and hosted by Vijayawada branch. A lot of thanks to Hayat Palace, V.R. Swami Garu, and supporting staff for supporting us and making an event memorable event. Let us carry forward the knowledge and before concluding, I also thanks Sandeep Garu for maintaining my media. I request Sandeep Garu to be onto the stage. I request the Sandeep Garu team to be onto the stage. ఇప్పుడు మైక్ నేను రెడీ చేస్తానండి మీరు రండి
ఫోటోకి రండి పర్లేదు
ఫోటోకి రండి సార్
2 days ఎటువంటి టెక్నికల్ గ్లిచ్ లేకుండా మాకు సపోర్ట్ చేశారు కదా రండి మనీష్ గారు
రండి
ఫోటో
మనీష్ గారు
చెప్పా అసలు అన్నీ చెప్పా
Sai. Manish sir. Sai.
So with this all, let us carry forward the knowledge, connections we have gained here and continue to upload the values and excellence of our professional. Wishing you everyone's safe journey back home and looking forward to meet again in future events. Thank you everyone. Thank you for supporting this event. So I sign off as a Secretary Vijayawada branch. Please, we wish you again and meet you again for the next event. Thank you very much. Thank you for supporting this.
National anthem in
So I Jaya Hai Bharat Bhagya. Jaya Hai, Jaya Jaya, Jaya 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 Hai. So, I forgot one name, sir. I thanks Bujji Garu for making us all smile with his photos, and we will be eagerly waiting to get our photos very soon. Thank you very much. Thank you. I request Bujji Garu and his team to be onto the stage.